Good afternoon and welcome to Community Candor, our session on finances for small businesses, Financial Friday. Today we are going to be talking about money tips for small businesses to help them grow and sustain their business. And we've got two guest speakers, Michael Cheatham coming to us from Comerica Bank and Glenn Wilson, the President and CEO of Communities First, which is our host for this event, and Comerica Bank is our sponsor. So welcome, thank you for joining us. Quick couple of reminders I want to let everybody know in the audience that we will have a registration link that will appear on the screen as well as in the comments. Please remember to register so that we can share resources that we get, share those directly with you. So again, please register. If you have questions or comments, please put those in the live comment section and we will address those as we go along during this presentation. And please share, host a watch party, share this information, share with someone that you know that has a small business or is working on starting up a small business and could use these resources to help them grow. So I'd like to start by just doing introductions. My name is Renee Kent. I'm the Special Projects Manager for Communities First and have 20 years of experience working in investment and finance for community projects, specializing in affordable housing, community development funds, as well as financial education and grants and sponsorships, and then most recently community development projects. And so I'd like to welcome Michael Cheatham. Michael, could you just provide a little bit of information to our audience about your experience and your background?
Absolutely. Thank you. Michael Cheatham. I'm the External Affairs Manager for Southeast Michigan here at Comerica Bank. I've got 26 years of experience in banking. Most of that time has been spent in the banking center system and management. So I have a lot of experience working with entrepreneurs and small business owners. And I have a passion for financial education. So I'm always thankful to partners like Communities First for giving me the opportunity to come out into the community and provide this, what we believe is very valuable information, with the idea that we're helping to empower our communities to be more financially successful.
Thank you, Michael. And Glenn, would you mind sharing some information about your background experience and then also talking about this series for our audience?
Yeah, no problem. Glenn Wilson, President, CEO, co-founder of Communities First, Inc. My background, I've been a serial entrepreneur most of my life. Had owned several businesses. Always been all about trying to be as independent as possible. Before I got it more into the nonprofit world. However, I still bring a lot of things that I've learned entrepreneurial, the same mindset into the nonprofit space, to make sure that I say that we're mission focused but business minded, and so hopefully we're able to give some of that information, and share some of that with you today. The reason why we're here is post-COVID. There was a lot of things going on, or pre-COVID, sorry, a lot of things were going on in the community. People had needs. People was really in shambles when it comes to their small business finance or personal finance or education. So Renee was working on that as people was reaching out. So we wanted to make sure as Communities First, like Michael said earlier, to empower people and give them the information that they need. So Renee, did a great job putting together this series of some great speakers. And that's why we're here today. And so we only got like this week and another week. But then we have another series that'll be popping up here pretty soon on some different topics that you'll probably hear a little bit more about next week. But we're real excited about what is happening so far. I mean, with this, we've reached thousands and thousands of people, not just in Michigan, but in the Midwest and in other states as well, with people that's been tuning in and sharing the video. So please, share, share, share. And if you're watching, continue to share it with those around you. And you can join us on the multiple platforms that we have. So thanks for being with us today.
Thank you, Glenn. And just to reiterate what you said, this is a culmination of sessions that we've done to bring tools and resources to small businesses every other Friday to help them, manage their accessing to tools and resources, as well as avoiding identity theft and investing their money. And today, we're really going to talk about tools and resources to help small businesses sustain and grow. And the goal is to help keep your business and your dream alive. And in order to do that, you have to continuously assess your financial situation and look for ways to improve it. And so we hope through this discussion, you'll be able to pick up on some information that'll help you with your business needs, especially now as we're looking at shifts in the economy and within specific industries. Your financial management should adjust accordingly as well. And so to kick this session off, Michael Cheatham is going to share a presentation that he's put together that's going to talk through financial management strategies. And so, Michael, if you can share your screen, we'll get that pulled up. And after that presentation, we'll go into some more discussion items based on the information that was covered. And again, just a reminder, if you have any questions or comments as we're going through this, please put them in the live comments and we will address them right after Michael's presentation.
Okay, so thank you again so much for this opportunity. So what we're going to talk about today is financial management for small businesses. And, for many of you, this might be a review, but hopefully there's some nuggets in here that you can use to, take your business to the next level. And I always say, the goal right now is to help people survive and thrive in the wake of the pandemic. So hopefully this information will allow you to do that. So the benefits of financial management, are relatively simple. They're going to help you reach your goals by making good financial decisions. So it'll help you know your profitability, forecast your growth, plan for diversification for new product lines or reaching new markets, and then prepare for financing. A lot of times when you talk about small business, what we call technical assistance, it's about making you bank ready. And we recognize that many businesses, especially early stage businesses, are not necessarily quite ready to go to a traditional financial institution to get funding. So through this process, hopefully this will help you along the way so that you can get prepared. But I don't want to overlook the fact that there's a great entrepreneurial ecosystem here in Michigan right now. And so organizations like Communities First and the different CDFIs or community development financial institutions and technical assistance providers are also available to help you as you level up in your path towards business ownership and business growth. So budgeting sounds pretty simple. I know you probably are thinking about this, as it relates to your personal finances. Well, budgeting is just as important for your business. Knowing how much you have coming in and how much you have going out. I don't know if I can say it any simpler than that. That's at the very basic level of running your business. Are you bringing in enough to cover your expenses? And if you're not currently in that position, that is even more of a reason why you'd want to pay closer attention to today's presentation. But you want to start with a budget. As part of budgeting, you're going to need some level of bookkeeping. It's a critical component of your financial management plan because it allows you to stay organized as you're tracking your income and expenses. And it, as part of the budgeting process and bookkeeping, it's the basis for all other financial management, as well as decisions that you'll make going forward in your business year, in your fiscal year, and in your planning process for years to come. One item on here that it's a term that you may not be familiar with, and that's the owner's draw. So that is the fancy way of saying how the owner gets paid out of the business. So this is basically your paycheck from the business. So there are 10 basic bookkeeping steps. The first and foremost is obtain business accounting software. Now I know that there's a lot of us out there who are technology averse, but I think you'd really be doing yourself a disservice if you didn't become comfortable with the technology that will help you become more efficient and in running your business. I'll take a step back and say something that I say at all of my entrepreneurial presentations, which is, and this is not a slight to everybody, it's just to help kind of set the tone and the understanding of why what we're doing today is so important. You might be, the best baker in your family. You might be an award-winning baker, but just because you can bake a cake, that does not mean that you know how to run a bakery. Those are actually two different skill sets. So what we want to do is put you in a position where you can not only produce the product, but that you can run the business so that you can efficiently and effectively bring that product to the market. And so you want to, again, you want to obtain some sort of accounting software. There is no shortage of softwares out there. So since none of those organizations are paying me, I'm not going to make any direct recommendations. Then you also, number two, and this is, I would say this is probably 1A. This might even be one for a lot of you. You want to separate your business financials from your personal business or your personal financials. So you do not want to be doing things on behalf of the business out of your personal bank account, and vice versa. You do not want to be making transactions out of your business account for your personal financial issues and financial requirements. And this is, again, why the owner's draw is actually an important concept, because the way that you bridge that gap is you use the owner's draw to pay yourself, then you put that money in your personal account, and then you take care of your personal transactions. On the flip side, the reason that you don't want to use your personal finances or your personal bank accounts and things to do transactions for the business is because you then may put yourself in tax jeopardy. But even on a more simple, in a more simple way, it makes it more difficult to do the type of accounting and bookkeeping that we're talking about today. You want to keep those things separate. You want to balance, they reconcile, fancy words. You want to balance your checking account every month. Actually, some people do it every day, depending on the number of checks they write. But you want to make sure that the payments that you're sending out are being received correctly and processed correctly. And you want to make sure that you're accounting for all of your income and other expenses. Because what will happen is at some point, something's going to wind up out of whack, and you don't want to have to go back through 10 months worth of bank statements to figure out what happened. So you want to stay on top of your bank account. You want to deposit all sales. So if you sell a cake, you do not want to put that money in your purse or your wallet and then go to Best Buy and buy a new TV for your house. You want to take that money, put it into your bank account, and then, if necessary, do an owner's draw, put that money into your personal account, and then go buy your TV for your house. You want to deposit all of your sales revenue into your business account. You want to write business checks for business expenses. Again, not mixing your personal and business finances, but also checks, even though they seem to be outmoded, are still a really good way to keep records. Because not only do you have the check itself, your bank actually keeps those records for 7 years or longer. So you always are going to have a record of what you've done. And it also shows on the back of the check that the person that you intended to pay actually received and processed that payment. So that's why checks are still a good idea, I believe, for most businesses. Get a separate business credit card. Again, you want to separate your business from your personal. So if you're going to Aldi or GFS to buy cake flour for your baking business, you don't want to use your personal debit card, or your personal credit card to do that. You want to have a separate credit card for your business. For most entrepreneurs who are just getting started, when you apply for your business credit card or any sort of business credit, they're going to look at your personal credit anyway. So get a separate card for your business. You want to pay your business expenses first. So this is difficult sometimes, but this goes again back to separating your personal finances from your business finances. You want to protect your business by staying on top of all of the things that you need to stay open and to stay active as a business. You want to generate a profit and loss statement, which I'll cover a little bit later. And again, that's just another way to keep track of the health of your business and to find out at the end of the day whether you're doing good business. Because if you're spending money or not making money, especially if you don't know that that's your situation, then you're not doing good business. Now, some of you might be saying, well, I just got started, so right now I haven't reached my break even, and that's fine. The idea of the profit and loss, though, is that it will allow you to keep track of how close you are to your break-even point. And then, as I've been saying all along, pay yourself with an owner's draw. Many of you have cash businesses. Just because that money goes into your purse or your wallet, that does not mean that that's your money. If you earn that money by doing business, you should be putting that money into your business account. And then you pay yourself again with an owner's draw. I hope that might be the last time I'll say it. We'll see. Okay, so financial management software, as I mentioned, there's no shortage of options for you to use. But the thing that they do for you is they help you to organize and complete daily accounting tasks, create reports that you'll need, because when you do get to be bank ready, and actually even if you're just starting out with technical assistance providers and micro lenders, they're going to want to see some documents. And you don't want to be sitting there at your dining room table with a pencil and an eraser and a notebook if you can avoid that. So the accounting software will help you generate reports and keep track of things for you. Again, as we talked about, they help you track the financial health of your business to make sure that you are actually doing things efficiently and with the ultimate goal of generating profit and growing your business. And so, again, they said it here, don't use paper to run your business. Now, I recognize that for some businesses, especially early stage businesses, that might actually be best to get started, but you do not want to make your notebook your whole accounting process or your whole accounting system. It's fine, especially to double check maybe, or to write things down while you're on the fly, while you're at the construction site, or while you're at the store. So you want to write some things in your notebook, but ultimately you want to put it into an electronic system because it will ultimately be easier to go back and pull the information that you need and keep track of it. And you can also back that up. Financial statements. So these are the different types of statements that most banks and most financial institutions are going to want to see. But you're not just creating these reports for them, you're creating them for yourself, because again, these are like when you go to the doctor and they have your health records. These are the health records for your business. So there's a balance sheet, a cash flow projection, and the profit and loss. So the balance sheet is like a moment in time. Where is your business as of the day that the balance sheet was created? And the idea there is, again, you want to see how you're doing. Usually most organizations do balance sheets at the end of the month. They have an end of quarter balance sheet and oftentimes an end of year balance sheet. Your cash flow projection or your cash flow statement, that allows you to keep track of the actual amount of cash you need to have on hand to run your business. Because unfortunately, or I shouldn't say unfortunately, one of the complexities of business, especially when you talk about accounting, is what you have on paper is not always what you have available to you. And so your cash flow projection helps you make sure that when your bills are due, you have the cash on hand to be able to pay them. And in your profit and loss statement, again, your P&L, that just tells you, are you doing good business? Are you on track to make your break-even point? Are you losing money and didn't know it? Because the last thing that you want to do is find out at the end of the year that you've actually lost money. Because, unfortunately, if you wait till the end of the year to get that information, you've missed out on the opportunity to make adjustments to help fix that situation. And while we're on the subject and we're talking about banking, our general mindset is usually to pay as little in taxes as possible. So oftentimes we will structure our finances so that our business shows little or no actual profit or income. And, to the extent that you're going to pay less in taxes, great. But understand, when you show little or no income, that's the same number that the bank is going to be looking at to determine whether you can repay a loan. So if it is your intention to apply for a loan anytime soon, you may want to go back and look at your financial strategy and report what you are earning so that you can actually benefit from that when you go to apply for funding or finance. So a balance sheet, and we're not going to use the guide here, but what a balance sheet is really just a snapshot of a specific point in time. So it lists your assets, and that's anything that has value, and then your liabilities or debt. So assets on the left, liabilities on the right, and then the total must be the same. Now, when I was in accounting class, that was really a difficult concept for me to understand. But the area where you make up for any differences between assets and liabilities is owner equity. And owner equity is another way of saying how much of the value of the business the owner or investors have put in and how much it is worth at that particular amount, at that particular point in time. So looking at this particular balance sheet, it shows an owner's equity of $35,000, which means that of the value of the business, $35,000 is what the owner put in. And when I say owner, I mean also investors. So depending on where you are in your financial continuum, a lot of owner's equity is good because that shows that you've got skin in the game. As you grow, you may want to look at your owner's equity a little differently. I'm not going to get into that today, but just know that your owner's equity number will fluctuate. And oftentimes it winds up being the back end calculation after you figured out what your hard numbers are. So the assets part's pretty simple. You can go to the bank, figure out what your cash is. You can figure out what the value of your equipment is and the value of your inventory, so that your asset side is pretty simple. Your liabilities, those are your debts. Again, that's pretty simple. So as you can see here, you have $55,000 in assets and $20,000 in debt. So because both sides have to match, that means that your owner's equity would be $35,000. So usually that number, the owner's equity, is dependent upon these other figures that are in your balance sheet. So cash flow. So your cash flow has two primary definitions. The scientific definition is the balance of cash received less the amount of cash paid out over time. The other more basic way of thinking of it is moving cash in and out of your business. So, money coming in, that's cash flow. Money going out, that's also cash flow. So you're going to use that idea to create a projection. And so it assumes that you have, it uses the assumptions to forecast how much you're going to have in the future. So it's a projection in the future. So you're going to look at the money coming in and out, what that in and out looks like in the future, and then project whether what you have coming in will cover what you have going out. So it's no different than what happens with your personal finance. You know that your rent or your mortgage is due, let's say, on the first of the month. So in the previous month, you're looking at your income and your other bills so that you can make sure that at the time that you have to make that rent or mortgage payment, you actually have the cash on hand to cover that payment that's due on the first. Well, that's basically how this works. You're going to be trying to use this to determine, hey, when I have that payment due on my delivery truck, am I going to actually have enough cash on hand before when it's due? Sometimes my brother used to tell me, when I would ask him to pay me back my loan that I gave him, he would say, well, as long as I owe you, you'll never be poor. Well, that's, I guess, true. The problem is DTE doesn't want to hear about that. I can't tell DTE, hey, my brother owes me this money, you should go talk to him and then turn my lights on. You're going to need to have that cash. So this projection helps you figure out and make sure that you're going to be okay when, in fact, that money is due. And I'm going to do a time check here. All right, so, and it helps you set your sales and expense goals, determine your break-even point. And I mentioned break-even earlier. What we're talking about when we're talking about your break-even point is how long it takes for your business to actually start earning or making money. And what I mean by making money is that you have more money coming in than you have going out, or where your balance sheet is actually balanced to the point where you're not losing money. And again, most startup businesses lose money in the first few years, and that's okay as long as you have planned for that. And so this helps you figure out when you're going to reach your break-even point. It helps you plan for equipment purchases and replacement. And then, it helps you figure out things like, hey, will I have enough money? For example, if you're a lawn care service, will I have enough money when lawn season starts to pay for the gas I'll need, the maintenance, to pay my crews, all of those things. And then, you want to know when you'll need one. So again, it helps you track liquidity, a fancy word for saying how much cash do you have on hand. Helps you determine whether you actually need financing, because sometimes through your cash flow projection, you realize I'm not going to have enough money to pay for these critical purchases. So I'm going to need to get a loan to help with my cash flow. And you'll see that a little bit later. And then you want to show your ability, and this goes back to your tax returns. You want to show the ability to actually repay the loan that you got from the bank. They're going to want to see, okay, show us, if you have a payment of $500 a month, where's that money coming from? So that is something that you need to really keep in mind. And so here's a sample of a cash flow projection. You have your sources of cash. You have your operating uses of cash. So we would just call those generally your expenses. And then you have non-operating uses of cash. And then those are things like paying loans, equipment purchases, those sorts of things. The owner's draw is part of that. And let's see. And so to increase cash flow, here are some things that you can do. Well, it sounds easy, but increase the number of things that you sell. And sometimes that means more marketing. Sometimes that means keeping more inventory on hand, those sorts of things. Increase the price of what you're selling. Reduce your expenses, which is how most businesses tend to do this. Another more sophisticated thing is change the timing of your expenses. So I don't know if many of you know this, but for your personal credit, most creditors are willing to allow you to actually choose a payment due date that fits best for your personal budget, usually somewhere within the area of 10 to 15 days. So if they originally write up the loan for your payment to be due on the 10th, you might be able to get them to adjust it to out as far as the 25th to be in better sync with your income. So you can also possibly do that with your business expenses, especially if you're dealing with vendors, people that you're buying products and services from. And then you're going to be wanting to save more money before you actually open your business. Oftentimes, again, businesses run into trouble because they don't have enough money on reserve. And if they haven't reached their break-even point, they may burn through the money that they've been saving to run the business before they're really ready to. So sometimes to increase your cash flow, you may just need to wait to open the business until you save more money. You want to obtain sources of cash other than sales. So this again is where we talked about you might need a loan or line of credit because at the time your cash flow is not sufficient to cover your necessary expenses. Reduce or change the timing of the owner's draw. That's another thing that happens. A lot of businesses, especially once they get more sophisticated and the business owner has sufficient personal wealth, they may not even take an owner's draw in a particular year so that their financials are strong enough to allow them to get other financing. I've seen that on many occasions. Or, hey, you know that you're going to need to pay for a new transmission for your delivery truck. So that might mean you have to wait on taking out your payment until that's taken care of. Buying inventory from a vendor at a lower price, that's just negotiation. You know, maybe you can actually get a lower price from the vendor. Oftentimes, you can do that if you are willing to purchase more or to sign a purchase contract. They would then sell you those items at a lower amount. Obtain credit from the vendor. So after you've developed a track record with the vendor of making on-time payments, they might be willing to let you basically take the product or service and pay them later. So that may also help you. And then you want to establish policies to help you get paid sooner by your customers. So sometimes you offer them discounts to pay you sooner. Also, there's another thing in here where, you know, you might offer them a discount to pay you in cash. That's actually for those of you that buy gas, which I assume is everybody. That's one of the reasons why gas stations will actually charge you less money if you pay in cash. Because first of all, that puts cash directly into their drawer, which they can then turn around quickly or more quickly. But also by accepting cash from you, they don't have to pay the fees to the credit card companies that they would normally have to pay. So this is a similar process. Again, providing incentives for customers to pay in cash. So you allow them to actually pay less, give them some sort of discount. Now, I put these next two here, specifically because I like talking about bakeries because I like eating. But, you know, especially in the time of COVID, there's been a lot of restaurants that have been hard hit, you know, and we recognize that, you know, that's probably one of the more difficult industries to be in right now. So what some restaurants have done, since they can't service the same number of people in their actual building, is they've started to cater. And so I wanted to put that in there. Also, selling gift cards. And the idea of gift cards, which is actually, I think, a brilliant idea, is it allows people to put money in your drawer before you actually have to sell them your product or sell someone the product. So you're actually getting money up front. Unfortunately, the seedy side or the bad side of that is some businesses, none of the businesses that we know, some businesses actually count on the fact that once the gift card is sold, that they'll be lost or never used. So in a sense, that business has gotten free money, because if you never ultimately have to exchange the cash you received for a product or service, that's just free money in your account. Increase the number of corporate accounts. What we're talking about here is, this is not always true, but generally speaking, businesses tend to be better customers than individuals. Again, I'm not saying that that's true across the board, but generally speaking, especially the larger the business is that you're selling a product or service to, the more likely you are to get your payments. So for some people, they found that instead of chasing around individual customers, individual people, they found that it's helpful to have more corporate customers. Here's another one of those kind of more sophisticated tricks, if you're able to do it. Your landlord may actually give you a discount on your rent if you're willing to pay the total that you would normally pay in a shorter period of time. And so as long as you can work it out where what you wind up paying throughout the year is less if you pay it in 10 months than 12, that might be a way to go for you. Unfortunately, businesses to increase their cash flow or improve their cash flow also, of course, have to reduce staff. And then you might want to change or limit your store hours, because when your store is open, that means your lights are on. That means you got employees in there. So what some businesses have done is done a survey basically of either their clients or of their transaction history to determine when they're busiest, and then basically close down or have limited hours for those times when they realize they're not so busy. And then for restaurants, again, maybe you reduce your menu options. As we know, a lot of restaurants have actually had to come up with means to get rid of food that they can't sell before it goes bad. So again, they've gone to catering. Some have, have been a blessing to others by actually giving the food away to a food pantry. So here is kind of a diagram that explains kind of how cash flow works. So as you can see, you have the sales pump. So this is all the work you're doing to actually bring revenue into the company. So you can see where the biggest bucket is in sales. That's money that you get from customers. You also, though, may get money from lenders through debt and investors through equity. And so all of those things feed into the bigger box, which is available cash. You also have accounts receivable. So that's when you make a sale on credit. And so now people owe you, but it doesn't actually get into your available cash until they pay you. So while it's waiting, it's called accounts receivable. You also have inventory. So you've had to purchase the inventory and it has value. So that's why it has its own box, but it doesn't go to available cash until you sell it. And then you also have to subtract from that the amount of labor that it costs you to build that inventory, the materials that you use to build that inventory, and also other direct costs associated with manufacturing or purchasing that inventory. Then from that available cash bucket, you have all of these drips, all of these different drips where the money is now leaving your bank account. And so you have the cost of selling, you have the cost of administration, you have the general costs of running the business, having the lights on, things like that. You're paying interest, so you're paying off debt, sales tax, those things, payroll tax. Later, you have income tax. And if you're actually, instead of buying something or equipment, you're leasing it, well, you've got that. And so the reason I wanted to show you this is because I wanted you to pay attention to all of the little faucets that are on here that have little drops coming out, because those are ways where money starts to leak out of your business. And in some cases, you can actually turn those faucets off or down through decision making. So when we talk about bad credit, sometimes they call it a bad debt expense. That's for people that you've given credit to who won't pay you. So one way to mitigate that is through collection companies. So sometimes you might sell that debt, not for the full amount, but you might sell that debt so you can recoup some of that money. You might also have stricter credit guidelines that would also reduce the amount of money that you lose in bad debt. For inventory, we have obsolescence. And again, that's when what you have on the shelf is no longer something that you can sell, either because it's out of date and nobody wants to buy it because it's not the new hot thing, or because for some reason or other, it is no longer a viable product. So for example, if you're thinking back to the bakery, at some point, once you make that cake, it's going to get stale and you can't sell it. So that's basically lost money when you have to throw that cake away. Or you can give it to me and I will eat it and we'll be good. You also have shrinkage, which is basically another way to say theft or damage to those that inventory. And so I just, again, wanted you to see this so that you have some visual idea of how your cash is affected by all of these little drips and drops. And so to the extent that you can control those drips and drops, you want to do that. And that's a great way to also save money for your business. All right, so what not to do? I'm going to skip through some of these, but most importantly, don't postpone paying your taxes. Nobody wants to owe the government, and they can shut your business down. So that should probably be your top priority. Right next to or right before or right after paying your employees should be paying your taxes. This sounds self-serving because I work for a bank, but don't hide from loan officers. Oftentimes, if a loan officer, keep this in mind, banks want you to pay them back at the end of the day. So they're going to do things to help you pay them back. So sometimes that means they might allow you to make interest-only payments. They might even work on lowering your interest rate. There's a lot of things that loan lenders can do to help you pay them back. But you'll never get to have those conversations, and they'll be less likely to want to do it if they have to come find you. So don't hide from them, be forthcoming, and through your payroll projections, your cash flow projections, you will even know, hey, I'm going to have a problem in 6 months. Let me start talking to my banker now so that we can get in front of it. And sometimes it means you might just get another loan, but you'll never know that if you're hiding from them. Don't pay vendors late. You don't want to be in a position where if you're a bakery and then because you're not paying your vendor, now you can't get sugar. You're going to have a tough time being a bakery with no sugar. Don't overestimate your revenue. And that's simple. Just, you have a pretty good idea of what you're going to be able to sell and how much. So don't pump up that number. Be realistic. The worst lie you can tell is the lie you tell yourself. So that is definitely true in business. And on the flip side, don't underestimate costs. It's better to actually assume you're going to spend more on something than less, because what you don't want to do is have a smaller number than you should for your costs and then get out there and start running your business and find out through your other activities like your profit and loss statements that you're actually losing money. And I know that my time is running short, so I'm going to speed up a little bit. So for your profit and loss statement, again, this talks about your income and expenses or revenue and expenses over a period of time, and it tracks your profitability. Again, are you doing good business? It shows whether you're successfully buying and selling and how well you're managing that process. And it helps you understand your ability to grow and repay debt. And as you see here, it's the most important report from your accounting software. And so this is what it looks like. You're going to add your sales, and then you're going to subtract your cost of goods sold, and that gives you your gross profit. And then you're going to subtract your overhead. So that's your light bill, your, all the other ancillary things that it takes to run your business. And then it gives you your net profit. And your net profit pays for what? Your owner's draw, any expansion or equipment you're going to buy, loan payment, and taxes. So some key points to remember. Managing your cash flow is a core competency of small business ownership. Said another way, this is what separates a good business owner from a bad business owner, is being able to manage their cash. There's a lot of good businesses that went out of business because they didn't understand this concept. It helps you tell a story so you can actually figure out if you're doing good business. It helps you plan for seasonal fluctuations, as I mentioned with the lawn care service. You're not probably spending a lot of money in the winter, assuming that you're not shoveling, that you're not doing snow removal, but you know that things are going to pick up in May, June, July, and August, so you want to plan for that. It helps you figure out how to keep your cash coming in and going out quickly, because that's what you really want. You want those payments to come in and either sit in your bank account, that money to sit in your bank account, or to get those payments out so that you can actually make more money. It helps you look like you're professional. I mean, at the end of the day, this is grown folks type of stuff. And so by having a handle on your cash flow and your financial statements, you are actually showing a level of professionalism and sophistication that will help you then attract investors and earn financing from financial institutions and others. And then you want to ask an accountant for advice. So again, that might sound self-serving as a banker, but they're the experts on all of these things that have really caused some businesses some real problems. And so don't worry about asking for help. You want to get technical assistance. There's a lot of organizations out there that can actually help you run your business better, like Communities First. They can help you accountants can help you find ways to increase your income, reduce expenses, even if that means they're going to help you reduce your tax liability. And then you want to be able to have mentors and partners that you can talk to. I recognize that oftentimes we feel that, we can't tell others about what we're doing because they're going to use that to help put us out of business. Well, that is not always the case. And oftentimes you can have mentors and partners that are in a different line of business altogether, because there are some universal issues that all businesses have to go through. So we want to think co-petition instead of competition. Okay, that concludes my presentation. I am open for any questions, or we can move to the next part of the agenda.
All right, thank you, Michael. That was.
Oh, go ahead.
Say that again.
No, I was saying, I know I went through that quickly, and I'm sorry, but hopefully we'll have an opportunity through the questions to fill in any blanks, and also we'll be sharing the PowerPoint.
Yes, thank you. I think that was a very comprehensive overview that you provided, and as we have questions that come in, we will definitely address them. In the meantime, I have a couple of points and a couple of questions for both of you. And I just want to just back up to that presentation. Really the theme in that was discussing money coming in, understanding how money comes in, and really getting a grasp on how money is going out, where those drips are. And so thank you for, walking us through all of the ways that small businesses can really get a handle on, understanding and budgeting their money, and also understanding how to analyze where the money is coming in and where the money is going out. And so I thought maybe we'd start with, just kind of in the beginning and talk through what resources are out there for businesses, because you made a very good point that because somebody is excellent in their industry, as a baker, if you will, that doesn't mean that they necessarily have the skills as an accountant and in managing, those money decisions. And so maybe Glenn and Mike, you can share some resources that are available in the community for businesses to tap into to help them with technical assistance and getting their money together.
Yeah, I mean, absolutely. Real quick, Mike, yeah, thanks for that comprehensive list of everything. I mean, pretty much you hit almost everything on the dot, and I think you went through it quite well. So it didn't seem like you was going too fast. I was just thinking to myself, maybe I need to borrow some money from Mike so that he could tell them. So, hey, call me. I was just messing with you. But some of the resources, I mean, in Flint, Detroit, and some other places, but you can always get in contact in Detroit with like the DEGC. They're always there to be able to provide you technical assistance, and the Detroit Chamber, to get you some resources there or to tap you into some other resources. In Flint, you have the Flint Genesee County Chamber of Commerce that has a lot of different resources and trainings and technical assistance for government contracts through, I think it's called PTAC. And so, if you want to do government contracting, if you want to find, accounting services, you also have the Michigan Economic Development Corporation. These are just larger entities that are within the community that can tap you into some of the other small ones. And then you have some other smaller organizations. When I say smaller, like banking institutions that may provide different things, like Comerica Bank might provide you certain small business training, or they might have partners that they work with throughout the community that they can help tap you into. So trying to find out who their community liaisons may be. There's so many different resources out there for small business. I mean, even us at Communities First, we're a resource for small businesses that reach out to us asking about, how do they get grants? How do they apply for certain things, banks that they should connect with when they're looking for resources. So that's always the thing, is reach out to people that are connected, ask questions. I think Mike mentioned that earlier. People feel like if you ask a question, people are going to get in your business. People are just asking you questions because they want to know how to help you. Everybody's just not in it to to ask you your business. So, Mike, if you got some more stuff you
Sure.
add to that,
You got in Flint, there's Metro Community Development. They're a micro lender, community development financial institution. And so they offer technical assistance as well. The Small Business Administration, you may remember from the slides, saw something that said SBA. The Small Business Administration has a wide array of resources available to the small business owner for free. And as part of that, you have the Small Business, I'm going to say this wrong, the Small Business Development Technical Center. I think they've changed their name a few times. Organizations like that are able to help. I think that the Michigan Women's Foundation is working in Genesee County now. And so there's, as you mentioned, there's no shortage. If you probably just Googled small business support in Michigan, you'd get probably 10 pages of information. So one of the great things that's happened because of technology is it's made all of these things so much easier to research, And then another plug for banks, talk to your local banker. All of these resources that I'm sharing with you are the same types of information you can get in a conversation with your banker. I was talking to some young people that were running a lawn care service, and I said, you know what? Just like you spend time out here working, buying supplies, things like that, you need to spend at least 20 minutes per month with your banker, where you actually go in and sit down, set aside 20 minutes a month with your banker to talk to them about what's going on in your business and allow them to keep you up to date about products, services, and resources that may help you as you grow.
Thank you. That's a good point. And I hope that the audience heard that a lot of these resources are absolutely free. And so, you just have to really just commit setting aside some of your personal time to invest in your business. Not only to help it to grow, but in times like now where a lot of businesses are thinking about, shifting their business model. And so the best way to make those educated decisions about where you go from here is to know exactly where your business is and having those reports in place. So all that information is very helpful. And so I'd like to, just open it up to, we've got a couple of minutes left, to Glenn, who mentioned that he was a serial entrepreneur and has had experience with several businesses and several industries, just to share some tips that he has from his own experience in managing a business.
Yeah, one of the big things that I think Mike spoke to this earlier when he said, make sure, that you know where your money's going. Making sure that you don't have, that you're not over leveraged. Other thing I also realize in business, which, a lot of nonprofits and or businesses, sometimes they revert back from doing, but you actually have to spend money to make money. You have to spend it in a way that is smart. You can't be, dumb with how you spend the money, but you have to be very strategic about where you're spending money, where you're investing. Sometimes it might be worth it to invest in a higher quality employee or staff member than trying to hire 4 or 5 people and separate their pay out over 4 people. You might be able to have one person that's able to do the jobs of 2 people. So that's one of the things, is to spend money to make money, but do it in a smart way. And make sure that you're, talking to your accountant. Also, as a small business owner, is make sure your personal financial statements are in order. So just because you have your business financial statements, make sure you have your personal financial statements, because when the bank asks you to guarantee something, they'll say, hey, do you have any personal financial statements? And most small business owners struggle there with their personal financial statements and normally just send what they have in their bank statements. And so knowing where your money's going personally is a good thing. So to have a budget. So if a bank says, hey, you give me those, you have a very clear list about where you're at financially, where's your life insurance, how much you have there, things that you have in investments. It shows them that you're very serious about your finances personally, which means that you will take care of your business as well. Also teach people your business. And as an entrepreneur, there's a difference between being self-employed and being an entrepreneur. And I say that all the time. Being self-employed means you want to do your business by yourself. You don't want to share any information. And you want to be the only one to live, breathe, and die with that business. That's self-employed. Entrepreneurship to me is try to work yourself out of a job where you try to put people in positions that are great at what they do, and so the business can continue to run. So if you need to step away at any point, or you can make the company where it's sellable, right? Where you can actually sell that organization, sell that company, and if something else comes along, you can move on to something else and have another business. So I think once I got to that mindset of putting people in place, making sure that you're able to build a company that can sustain without you, those are the best companies to build, is to try to build it where the company no longer needs you. Sometimes that's where small businesses fail when it comes to growing, is because the owner doesn't want to move out the way. They want to have control over everything instead of trying to give people control and let the company build without them. And not saying you don't have oversight, it's just the way in which you do it. And then also the biggest thing is trust. In a small business is learning to trust the people around you and building a good network. Mike spoke to that earlier, is making sure that you have a good team of people, good mentors, people that's done it. One of the worst things that you can do as a small business owner is get advice from somebody from somebody that has not built the business. The best that they can give you, the best advice that somebody broke ever gave me was to show me how not to be broke, right? And the best advice for somebody rich gave me is how to be rich. And you realize sometimes the reason why a person is broke is because they have broke habits, or bad habits. And the reason why a person is rich, some people, not all, some people have privilege, I understand that, but some people have different habits. So get yourself around the right people. And when somebody tells you, yes, I have a small business and I've done all these things, and they say, oh, I've done this for this company, or I've done that company, go and check out and ask them about their credentials, about who's coaching you, because you might find out real quick that the person that's coaching you has not done the things that they're coaching you on, and really don't have no understanding on what to do or the steps to take. And they only can get you so far, and then you'll realize real quick that they'll be Googling information and repeating it back to you, with stuff they just heard online. So get around people who's done it and know how to do it.
Mm-hmm. That's another advantage. That's another advantage of a banker, because we've seen all kinds of businesses. I know the mom and pop businesses, I know the tier 1 suppliers, I know the accounting companies. So the information even that I shared today was really birthed out of experiences that my customers have had, because I've had to either help them work through them or help them prepare for them. And so that's another reason why you want to have a banker as part of your team. As a matter of fact, no matter how small your business is, you probably need a board of directors, or at least trusted advisors, where you have people like an accountant and a banker, somebody with some legal background or expertise, who they don't have to come and sit with you, every month or whatever, but just people that you can reach out to and say, hey, I got this question, I run into this situation.
Yeah, those are all good points, and also it kind of hits a common theme that we've talked about in all of these sessions, and that's the importance of building relationships and building out your network. So your relationships with not only people in the business, but with banks, financial planners, industry professionals. Build out those networks and build out those relationships so that you can, access information that'll help you grow your business and get you to where you're going. So we're going to wrap up at this point, and I'll just leave it open for final comments. Anything that you want to take from this discussion today that was either discussed or maybe we missed and didn't get a chance to talk about, but you want to share with the audience to make sure that, they take home this information with them. So 1 point or 2 points that you want to just highlight for the audience regarding today's topic. I'll start with Michael.
Okay. Well, first and foremost, I want to say kudos to all of you that joined in. You've now invested in yourself. And, unfortunately, we're always so busy that we don't always take the time out to invest in ourselves. So the information that you got today, even just the list of resources we ran off, will take you leaps and bounds in front of the people who don't have this information. So the fact that you took time out of your day to be here with us says a lot about your potential for success. So we want to thank you for being here. Thank you again for Communities First for giving us this platform and being the kind of the lighthouse in the community that people can turn to for support in many different areas. This isn't all that Communities First does. And so this is a great opportunity for me to thank you all too for all that you do to help keep our community strong.
Thank you very much, Mike. Greatly appreciate that. And we feel the same way about Comerica and partnering with you as well. One of the biggest things, Mike said it just here a minute ago, and I'm just going to piggyback off that when he says time. If you don't have time for your business, you don't have time for it to succeed. So I think the thing is that most people want their business to succeed, but they don't want to spend the time that it takes to actually build it. So you have to make a decision. If this is something that I want to do, it's all about decisions, right? And we gave you the information today, and you can either make the decision to actually do something with it, or you can make the decision not to do something. If you continue, like Einstein says, if you continue to do things the way you've always done it, you know what I mean? Like, then you're always going to get the same thing. Like, it doesn't even matter. Like, nothing's going to change. It's insanity, right? It was the point that he was making. It's just do the information, take the information, do it, implement it into your life, into your small business, and then continue to grow it. And like I say, if you don't have time for your own business, you won't have time for it to succeed.
Great.
Thank you. And I'll just add, it's hard to follow both of those points, but I'll just add something that I picked up on just from both of your comments. And that's, as a small business owner, especially if you're just starting out and it's just you don't have staff yet, and you can only do so much and be so many places at one time, it's important to have cheerleaders. So it's important for other people to understand what your passion is, what your vision is, and if you have a product or a service, what that product or service is, and get them passionate about what it is that you're building, so that they can be your cheerleaders also, while they're out moving through the world. And so you want to build those cheerleaders. And that just came to mind when Mike started talking and talking about the work that Communities First is doing, and Glenn talks about the work that Comerica is doing. And so while Comerica has its own, engine and advertising engine, and it doesn't need cheerleaders necessarily, it's helpful to have people in the community that know you and know the work that you're doing and can speak on your behalf. So I think the same holds true for small businesses, especially the smaller you are. You may not have an advertising budget, and so those cheerleaders will help you, get the word out about who you are and what you're doing, and also connect you to networks that you're trying to reach. So I know we've kind of gone over today, but a lot of information was covered. I truly hope that you found this useful and that you share it within your networks. And just a quick reminder, we're going to post this link on the screen for the census. If you haven't already, yes, don't forget to complete the census. Go to 2020census.gov. Please, there's still time, but what are you waiting for? Do it now.
That's right. And don't forget to vote. Vote.
Yes. Don't forget to vote. If you're here in Michigan, the August 4th, you should
Yep.
be at the polls. And then one more quick reminder, next Wednesday, we have our Wealthy Wednesday session, and we'll be talking about renting and owning, home ownership strategies and the pros and cons associated with both, and figuring out what's best for your current situation. So thank you for joining us. Thank you to Comerica for sponsoring us, and Michael Cheatham for providing all of that great information, and of course, Communities First for hosting this and future sessions. Take care.
Great. Thank you.